Hello, friends. Welcome to OAVA's weekly update on money and economy. We begin with some positive news on the global and domestic economic growth front. Data released during last week by the Bureau of Economic Analysis in the US showed that the second revised estimate for the US real GDP growth for Q3 now stands at 5.2%, surprising most analysts. That apart, growth on the domestic front in India too has surprised analysts positively. Data released for the second quarter of FY24 showed that real GDP growth was at 7.6%, much higher than estimates. While agriculture sector and private consumption growth has been weak, the bright parts of the GDP growth were double-digit growth in manufacturing at 13.9% and construction growth at 13.3%. After the release of this data, the chief economic advisor said that India may be underestimating the GDP growth estimate for the full year FY24, which is currently pegged at 6.5%. Moving on to news on Indian equities, this week saw the bullish momentum in the Indian equity market scale a new high, with the Sensex crossing the 69,000 mark for the very first time and ending at all-time high close of 69,653 on December 6th. The Nifty 50 has been trading very near the 21,000 mark. One of the key reasons was the results of the recently concluded state assembly elections, where the BJP emerged the winner in three key states of Madhya Pradesh, Chhattisgarh and Rajasthan. This signals continued political stability and an indicator of upcoming 2024 Lok Sabha elections as well. With the election uncertainty out of the way, market is expected to focus back on fundamentals and earnings as well as global growth prospects. Investors should exercise caution at current levels of the equity market. Moving on to news on Indian bonds. While the 10-year government bond benchmark continues to trade at 7.25, given RBI's cautious stance on interest rates and key repo rate remaining at 6.5%, foreign investors continue to buy Indian bonds. Foreign portfolio investors bought a net of 127.2 billion rupees, which translates to $1.53 billion of bonds in the month of November, the highest since June 2017, data from Clearing Corporation of India showed. This buying is likely ahead of India's inclusion in the Emerging Government Bond Index of JP Morgan GBI EM. RBI will release its monetary policy review decision by the RBI MPC on 8th of December and is likely to continue to keep key rates on hold. This could be because RBI will still cautious about inflation, which is still above its 4% target. Crude oil prices have been volatile and concerns around El Nino and agricultural output persist. This could make the central bank stick to its pause mode. And finally, we end the news on India's fintech startups. One of the top players in India's BNPL, that is Buy Now Pay Later space, Zest Money, a 7-year-old fintech, is shutting down operations. The news was conveyed by the management during last week to its employees, all 150 of whom would be laid off. The problems with Zest Money started some months back when its three co-founders stepped down and the new leadership team has been unable to maintain growth or secure fresh funding needed to continue operations. Prior to that, RBI's regulatory diktat on preventing fintech companies from loading credit lines onto prepaid payment instruments or PPI also led to its business being deeply impacted. That's it for this week from us. Please click like, share if you found the content useful, and do visit our website www.oawa.in for information on our courses. See you next week.